The challenges of financing infrastructure in Africa are as broad as the opportunities that lie in areas of the power sector, in telecommunications, in roads and other transportation, as well as social infrastructure such as education and housing. But the key challenge is really is financing. The financing size, if you like, the aggregate needs of funding across the African continent infrastructure each year is about $100 billion, and currently only $40 billion of that is financed. So that's a substantial $60 billion gap. Secondly, there's tremendous funding constraints on individual projects that are becoming larger as the African countries grow and as the infrastructure deficit, also the stock of that grows. And so, for example, the LAPSET project, which is a midstream oil and transportation project going through Ethiopia, South Sudan and Kenya, is a project that requires about $30 billion of funding, which is extremely hard to raise in any context. Also, I would add from a lawyer's perspective that the legal regime is also something that is problematic in terms of catalyzing funding. And so for many of these countries, there needs to be an upscaling in terms of procurement laws, in terms of competition laws, in terms of law for enforcing creditor rights, and other laws that make the PPP, public-private partnership environment, viable. So those are some of the main constraints to funding. The main source traditionally was the budgets of the individual African governments. And I say it was the main source because that's where most of the funding came from, but it was highly deficient because the governments were not able to raise sufficient funding to focus on infrastructure development. And so what you had is an extension then. The budgets were often supported by the multilateral agencies that were providing funding for some of the projects. And now we also see a greater breadth of multilateral agencies, including the African Development Bank, the World Bank, the EU, and bilateral government support as well. For example, China, India, and the US have been particularly active in providing funding. The third area which I would highlight is the private sector, which I think is the most important area going forward. And in the private sector, we now see the advance of infrastructure funds that are focused in Africa, as well as a combination of other sources through public-private partnerships that are also able to provide financing and technical expertise into projects. The bankability of projects really depends upon, I'd say, three components. One is financing, one is legal, and one is technical. So the project needs to be bankable in the financing sense, in that the investors need to be assured that this is a project that they're going to make money on in the medium term at the very least. So that's critical. Otherwise, you just can't take your project to the marketplace. Also, the legal components of the project need to be in place and to provide security that if you were to finance, that this project will actually give you a legal return, if you like, as well. So in areas such as the enforceability of creditor rights, the areas such as procurement, such as competition law, they need to be sound in order to make the project bankable. Third component, as I mentioned, is the technical components of the project. They need to be well put together, well structured from the very beginning to be able to market the project to investors. That this is a project that can be put off the ground, this is a project that can succeed, and this is a project that you're going to ultimately make profit from. The integration efforts of countries really cuts across three areas in my mind. One is regional integration. So we see now in the East African community involving Kenya, Burundi, Rwanda, and Tanzania and Uganda, that they are forging ahead with that type of economic integration, which is creating a bigger market, and it's also creating, I think, more interesting infrastructure projects for financiers to develop. So that's one form of integration. The other integration is the establishment of regional and international entities that are involved in financing. The one I would mention the most is the Africa 50 Fund, which is an initiative of the African Development Bank, which intends to pool financing from the African Development Bank from a number of African governments and state-owned enterprises, as well as private funding. So that is a form of integration which is facilitating funding into the infrastructure space within Africa. The third area that I would focus on is the need for more regional integration among debt and capital markets. Currently, there are, for example, 2 regional stock exchanges in Africa, in Gabon and Cote d'Ivoire, but there's certainly room for more because most of our focus has been on external funding for infrastructure projects, but that also needs to be leveraged in terms of domestic funding and regional funding. And so by developing better regional debt and capital markets, the African countries can themselves harness more local funding into the infrastructure projects. The Power Africa initiative has been a tremendous optical impact, I'd say, because frankly, it does a couple of things well. It highlights the tremendous needs of the power sector in Africa, which is required in order for the economies to grow. I think it also does very well the approach of bringing together US government and private sector entities, not just from the US but also internationally, into the Africa space, if you like, the Africa power space, and thinking about solutions and working on projects that can be viable. What it doesn't do quite so well is it doesn't bring enough funding. I mean, it's bringing about $7 billion of committed funding, but the needs are much greater. It's about $300 billion by many people's estimates, just to get a light in each individual's home. So it shows you the tremendous gap between the Power Africa initiative and what is actually required. But of course, one has to start somewhere. One has to start somewhere in bridging that gap. And so in that sense, the Power Africa initiative is extremely welcome. I worked in the public sector for many years, and I recognize that there's tremendous value of international public sector funding in Africa. But clearly the market is moving away, but it's not quite ready yet to move purely to private funding. And so it's interesting in that you see now a very complex and hybrid mix of private sector funding and public sector funding as well, working together in order to try to develop the Africa infrastructure space.